Yeah, very, very, very impressive. The close, especially. That's why the close matters so much. You can have all this cute little back and forth intraday, but the close is so important, more important than the open, to be honest. And what a difference it makes. Today was very, very significant, in my opinion, for I think almost every sector. Let's start with the S&P. Beautiful close yesterday, high of day, looked like it was going to open so well. I mean, we did actually open quite low, but closed at low of day. Look at this shooting star, very, very strong reversal. This is more of a reversal than yesterday's bullish, almost perfect bullish close. It really is the absolute opposite. So the technical pattern there was really thrown out the window. Now I'm gonna have to stay, and that's I'm happy about that though, because it really does coincide with my fundamental bearishness. Yes, I was short term bullish after yesterday's close, and I was looking at a test of this, and I'm sure everyone was looking at the test of the horizontal line, to be honest, after the close yesterday. But this close today was just perfect bearish close, and finally, it's starting to coincide with what I think is the picture fundamentally. So let's see. I now am more adamant that we're going to go back down and test this ascending line on the S&P. That's our upside resistance. This is the downside, immediate downside support. I do think we make new lows eventually, so I'll just throw that out there straight away. But very, very bearish close. Let's look at the Nasdaq. Same thing, exactly the same thing, really. Okay, here we're not going to hit ascending support because there is no ascending support. It's just too immediate. In fact, we're there. You could say we've actually closed below it, but it doesn't count. It's just it's too steep an ascent. So for me, you have this horizontal line which will act as support, as it did on this day, which actually led the bounce in the Nasdaq, which may have actually led the bounce in all the other indices. But I think we're going to go back down there, and we're actually going to close below it and then go back down. At which point the next support will be, we'll have to see. It'll probably be decided by a different market, like the Dow Jones will have probably support, and that will create support for the Nasdaq or the S&P. So let's just see if we can hit this and then close below it. Obviously, that'll be next week. I don't know what to expect tomorrow, Friday. Can we go this far down, 1 or 2% drop? Yes, we can. I don't know about closing below it though. So, but next week should be, I mean, every week, every day is exciting. But if I just zoom in on today's chart, look at this. This is today right here. This whole little section, we open low, we gap down, we open, bam, it starts to reverse, closes the gap, right? Hits this, doesn't go green. Probably a lot of people thought we would go green and create a beautiful candle. And then we fail, we lose this area, and bam, towards the end of day, we just flush and we close the low of day. Perfect bearish price action, realistically. So yeah, it's just good to zoom in and just get a good idea of what happened. And that was obviously the same pattern for all of them. Dow Jones is looking to test this support. We haven't broken below that support in a while. So Dow Jones, I've said this will be the one that leads the way down because it's still hanging all the way up here, even though it's been underperforming. It's still, all the way up there. So I'm looking for a close below this support tomorrow and then just take us down to this area, this sort of area, at least where the blue target is, just roughly there next week, and then close below, and that will lead us all the way down. So I'm just more excited that we're finally looking bearish. But the price action, I mean, the last couple of candles, it's just been, it looks bullish and then it's down, and then it looks bearish and then it's up. It's really been just throwing technical traders like me just like a rag doll around, and it's good. It's exciting. I still think that's why I like to have a fundamental macro thesis, and mine is that we should be bearish. I mean, I am bearish. So in the end, I think that will win over, especially seeing how far we've rallied. Russell 2000 kind of outperformed the others, but sorry, if these guys go down tomorrow, this will just be thrown back down and probably will test its lows of 188-ish. So I'm not sure if that'll happen tomorrow, but yeah, I forecast just downside movement tomorrow. And okay, if I get surprised again with some reversal, next week we're going to test the lows of the Russell, the low of the Dow, this area here, the low of the Nasdaq down here, 297, the S&P down here, 404. And by the way, the VIX, nice pump from this. I mean, it really had to make it. It was now or never, and it was now. Let's see if those guys, if the markets actually hit their lows, the VIX should go and test its little 22 range. And if we have any follow through, maybe we could finally put a bit of a bottom in the VIX, and finally test this 26. I mean, it has to test 26 at some point. So the markets, bearish now, just as they were very bullish yesterday. We're bearish, but I'm more assured of the bearish price action possibility compared to the bullish price action. So, I mean, it's my thesis, fundamental macro, and it makes sense. And we're very extended on the upside. The markets have rallied quite a lot, if you remember. Let's look at rates. Rates, they just, like a staircase, they're just staircasing their way up. We'll have 1 or 2 red days, but basically 2 steps up or 1 step back. 1 year is just flagging at its high, 5%. We're basically at 5%. Let's have a little close above 5%, sort of meaningfully 5.05% or something next week, maybe tomorrow. It's for me, it's just alarm bells. And I did say it's either the bond market that's right or the stock market. And for me, it's the bond market. The bond market's always right when compared to the stock market. The 2-year, trying to get a bit of resistance, but still inching out green days every day. 2-year green again. So let's see. I mean, we've cleared 4.5% on the 2-year. You've got to sort of shake your head a little bit and just remember we've cleared this resistance, and the 2-year is the most important one. We're above 4.6 now. We're at 4.65. If we go a little higher and we go to the 4.7 zone, that's like red alert stuff. So, alarm bells are just getting louder, in my opinion. 2 years just going to be testing its horizontal high of 4.9. Look at the 5-year, a more meaningful move up than the 2-year. Now we've finally cleared the horizontal line on the 5-year. No one really looks at the 5-year, but still it counts too, in my opinion. Look at that. That's a nice close. Yesterday's candle, Wednesday's candle just closed at the line. So maybe you could have said we're at resistance, but today we've cleared it. Next stop is really 4.4, which is essentially the old high. So the 5-year cleared the horizontal. The 10 years next, that hasn't done it yet. We're at resistance. We're at the 3.9. If we clear it, next stop, not even 4.10, 4.20 actually. And if you've got the 10-year making new highs, I mean, that's all it takes. That's all she wrote. 30-year, as usual, just a little bit behind the 10-year, which is behind the 5, behind the 2, behind the 1, and the inversion is massive. And, I did also hear how much of an inversion you have going on in the German yields, German bond market. I mean, it's like every single signal you want for a bear market is there. It's just you have this delay and then you have this dead cat bounce, which is, making people just drunk on bullishness, even though there's no reason. So for me, I remain bearish. This is even more of a reason to be bearish. This is the most important reason, in my opinion. So the yields going up indicate just the stock market is toast, or should be toast, and that the stock market is wrong about its move up. The 10-year on the EU yields every day is just green. Look at this staircase. We're basically 1 day away from touching the old high. How can the DAX just look at that, another green day? Although I think it closed when the US markets were sort of rallying in there at the high of day session. So this will probably have to open low. It'll probably test at the open tomorrow. It'll probably be straight on this ascending support resist, and then ascending support, probably close below it, and therefore move lower early next week, kind of no matter what. Probably at 15,000, test 15,000 next week, no problem, no matter what happens, in my opinion, just because of what happened today. So, but again, the DAX, the CAC 40, the French market, look at this. This just makes no sense. The FTSE, new highs that it's in total bear market. For me, it's just inflation just being represented in the stock price. So, but again, it looks like the US markets are ready to go down. So they'll probably drag everything else down. It's just very interesting stuff, the sort of bifurcation of certain sectors and how certain sectors are not supposed to correlate, like yields going up with the stock market. Very interesting stuff. So anyway, that's yields. Let's move on to the dollar, which was also a bit of a roller coaster, if I'm not mistaken, today. It's kind of everyday roller coaster. But what's important is the close. It closed strong, it closed up, and we closed. Okay, yesterday, Wednesday, we did close above the descending line, but today we closed above 104, right? For the first time. And for me, I said you close above 104, you close above this little adorable target, you close above this Tuesday, the 7th of February candle, which we didn't actually do on Wednesday. You know, we closed above the descending, but we didn't clear the candle. We didn't close above this. We ventured above it during the day of Wednesday, but didn't close above it. Today we did. For me, dollar goes up, you know, and it does have some catching up to do with the yields. We're going to go up to 105 point something, 105.5, maybe 106. But, you know, this horizontal line is next. I think we'll get a bit of resistance there, go back, little cup and handle, then break out of that. It depends what's happening elsewhere. You know, there can be some news, there can be some geopolitics, some other central banks of different countries doing something. Let's see, maybe yields will be topped out by then. It depends. But for me, we're going to start testing this range now. So dollar still bullish. And I just love the price action. I love how it's adhered to technical resistance. In my opinion, it did. So I'm very, very happy about that. Let's move on to commodities, which has been, you know, easier to read because of the dollar and the yield, I think. Copper moved up nicely. This I didn't expect, actually. I thought it would go lower with markets and with the dollar going up and with commodities, or at least gold and silver, the ones that are most immediately affected by the dollar. They were going down. But, you know, copper, strong move. This is kind of a perfect engulfing bullish candle, but we've seen how they reverse also the next day. So I still think copper needs to go down. You know, I just feel like it needs to flush this ascending support, and with yields and the dollar going up and the market and commodities should go down, I feel like copper should go down. But, you know, this is a great candle. So who knows, we could should be retesting old resistance just below 4.3. So I would say 4.28-ish. Very, very possible. But again, I see the dollar and yields going up, so it's going to be hard for copper to continue this bullish engulfing mood it has. So I'll just leave that there. I'm not trading copper anyway, so I'm not going to spend too long. It's kind of no point, you know. If you don't have skin in the game, you're not really allowed to talk about it too much. Natural gas, talking about not having a skin in the game. I have one natural gas stock, but otherwise I don't own natural gas. I'm very, very surprised. I mean, the only reason that it's not continuing this thrust above, let's say 2.7 and going up to, I think it should go up to 3.2, let's say, at least this target here. It really should. I mean, it's been destroyed. It's a hell of a buy. It's not some Chinese scammy stock. It's a commodity, you know, a global commodity, gas. And just several weeks ago, or maybe months, it was trading at 10 pretty much. And here we are struggling to get out of 2.5. That's why markets are so fun. But it's, I mean, for me, the only reason it's struggled is because maybe the dollar's going up. I know there's supply and demand stories out there too, but I mean, for me, it should be going up. Maybe the dollar and the yields going up and the market's going down, put extra pressure. But for me, any flush down here is probably an opportunity to buy the breakdown, actually, because it should be a bit of a fake breakdown. But you know, I've said this many times. I started to say it was a buy at 4, then I said 3.5, and then I said leave it till 2.5. You know, if I went in equally in each of those, my average would be around 3.25-ish, whatever this target is. I think it'd be 3.25. I did the calculations in the last video, but whatever it is, I would be happy with having an average around here. I think several months from now, you get it around 5. Can it go low? Of course it can. Where would it go? Well, it could have a fake breakdown and create a nice hammer, and then it's a great reversal candidate that people chase, and you're straight away at three in 3 or 4 days, trading days. Otherwise, if it does break down and continue with maybe the dollar going up, yields going up, you could actually get it down around two, maybe even below. So natural gas, I'm watching that. That's it's a fun one to watch. I own a stock which kind of trades in its own pattern, and that's a stock I really like, Trillion Energy. So I don't mind if that gets cheaper with natural gas. I think it's a good buy the dip candidate. That's gas. Let's look at oil. Yeah, sideways down. Looks like it wants to come down. I think that, I wouldn't be buying this middle of the range. If I had to do anything, it would be buy, but I don't doubt that oil could come lower, low 70s. You can see the channels that I think it's trading on. You also have the Strategic Petroleum Reserve games being played by Biden. He's just releasing them almost randomly, right? He sort of he treats it as some sort of a political reserve rather than a strategic reserve. I think I really disagree with that. And they might be out soon of reserves, and then they'd have to buy it, and that will create a real flaw. But you've got to pay attention to the news, and it's not just that. You've got geopolitics, supply demand, Saudi Arabia. You got the war. For me, oil overall is a buy. You could get it cheaper. At the moment, it's in the middle of this channel, looking like it wants to go lower, possibly with the dollar and interest rates going up, and therefore commodities going lower. So you could get it cheaper. So I wouldn't be chasing here. I'd probably be waiting for a bit more of a pullback. But I'm not in oil, and I'm not actually in, and I'm in one oil stock, the new one, Prospera Energy, the new one that's taken the little YouTube section by storm. There's a few channels that I follow that have promoted this Prospera Energy, and I kind of, yeah, I'm sold on the idea. I think it's a pretty attractive proposition, this stock. So that's why I bought it. Don't know how much it follows oil just yet. I don't think it follows oil too much because it's so attractive how cheap it is, if everything is true. So I'm kind of not associated with the oil price action at the moment. So again, can't really say I've got skin in the game, a bit like natural gas, a bit like copper. Where I do have skin in the game for sure is gold and silver. Let's get to that. So gold today sort of tested 1830, went just below 1829, 1828. What was the low of day-ish? 1826, maybe, yeah, 1826. And I remember looking at it and thinking, yes, I'm a genius. We're going to go back down to 1800. And no, we didn't. We bounced. The next thing I look at, we're at 1845. I think, no, I didn't buy anything. The day before Wednesday, I did actually buy a decent amount. It was my first real buy, so I was happy with that. And I wanted it lower. I was expecting 1800. So when I saw it at 1825, I thought, good, we're going to start, flushing 1820, getting to the 18 teens, and eventually 1800. So I thought we'd get to 1800 today, which is quite greedy. I mean, that's asking for a lot of downside in just 2 trading days. We didn't. Next thing I know, we're green, and then it starts to look really bullish. Thank God for the close of the crash and everything. It was a very small crash, but still, it made gold essentially flat or even red, silver too. So, well, actually, it was kind of unchanged, and silver, yeah, silver was red. So, I mean, I was quite happy to see that because now it looks like 1800 is possible again because that candle at the high of day, gold, 1844, 45 looked very good. And the miners did actually rally quite a bit. So I'm just going to stay disciplined. I've bought 1830, so I'm not gonna buy when gold's at 1826 unless I really think the bottom is in, the bounce is on. So I'm gonna do nothing tomorrow. I don't know what to expect, of course, but if we do have the dollar moving higher, if we do have gold at 1800, I'm gonna buy it. That's my next buy zone. I'm talking about the miners. I buy the miners. So I'm very happy about the little flush at the end. It also applied to commodities, or at least gold and silver. And I hope for continuation. Silver is weaker than gold, so I think that might drag gold down in case it needs a little nudge. I'm looking at $21 on silver to essentially equate to $1,800 in gold. So I don't know who's going to drag who. If they drag, or maybe they put the little intermediary bottom and actually curl and bounce from here. I'm hoping for a bit of a drop. I think with yields and the dollar going up, commodities have to go a little lower. So I'm hoping for that, and I do think that will happen. Looking at the miners, miners had a nice bounce. So even though this is a green candle on TradingView, it was a red day, right? We closed below yesterday's close. The low of day looked very attractive, but again, I thought we'd go lower, so I didn't buy it. And I've already bought the range according to gold. So for me, it's got to go down a bit more. You know, you can't have, and I also bought low of day kind of yesterday. So, you know, if I have the GDX is down 1 or 2% compared to where I bought it already, it doesn't count. I need at least 5% to be honest, preferably more. So for me, I think we can still get down GDX to 27, 28-ish, on the 27.5-ish, actually, I'm going to say on GDX. GDXJ, yeah, all the way down here, 33, just a bit above 33 maybe. So I'm really hoping that happens. That would be a great area to buy. And yeah, of course, I am considering the possibility that we bounce a little bit and basically go all the way down again. You know, I would love it. I would love to, you know, add more and lose on those positions, on those new ads straight away. I have so much to add. I really believe in this sector long term. And I really think that the bear market will come, and I want it to. And I want to lose money. I want to. As soon as I buy next 1, 2, 3 tranches, I want to lose money on all of them until I'm all in. Then I want to win money. Then I don't want to lose anymore once I'm all in. And I do plan to be all in, because that's what happened during the Corona crash. I was freaking out. I mean, not freaking out, but I remember seeing the GDX, the minus down 30% in a day, if I remember correctly. Just didn't make sense. And then I remember just hearing the Fed say they're going to do all it takes, print as much. And I saw the market go lower and lower. And I just thought, no, wait, they said you know, what's perfect for gold. So I just bought, I remember buying, and I was basically all in. I only had $2,000 or $3,000 left in my account on the sidelines. And then finally the market went up, and it was really an amazing year. So I'm kind of hoping for the same thing, just to be all in just as the market turns. So I really don't mind if it goes down. Anyway, miners, that's what I think. I think we'll go lower. Essentially, for me, the story is the yields, number one, going up. Number two, the dollar following close support, like infantry behind a tank. And then I think those two, the yields and the dollar, will just eventually pull the market down. You know, the market will acquiesce, and the commodities will go down with the market. That's what I think. Kind of the old pattern we had at the beginning of the bear market. I think that will have a bit of a return, and then everyone will start talking about what they were talking about when the bear market started, which is we're in a bear market, everything's going down, and you know the bulls will cease to shine. So that's what I think will happen. Finally, I will talk about Bitcoin, because that was a little surprising. You know, first of all, this massive candle, I said I didn't understand it. I thought there'd be news. Then I said, look, we're probably going to get to 25,000 because that's the big resistance, and we're almost there, and it's the perfect close for the day. Yes, we did get there. It wasn't too hard to call. But what was amazing is the reversal that happened in the markets that coincided with Bitcoin hitting the high. And I did say, look, Bitcoin is basically following the markets, especially the Nasdaq. So if Bitcoin puts in a perfect, and here it's trying to create it now, this shooting star reversal resistance, we should basically go back down and test, you know, this range here, the 22,000 range or just below. And if that becomes, you know, I don't know if we'll go down that violently, but, you know, then you could have some sideways move, a sort of fake bounce, and then you got this sort of head and shoulders, or whatever you want to call it, but, you know, pretty toppy pattern. And then if you lose this neckline, back down we go. And that, I mean, that I can see that only happening if the markets really violently come down, because Bitcoin's been outperforming the markets, generally speaking, the last couple of weeks. But it's just, I just find it amazing how it really did reverse on this 25,000. You know, I mean, this was the real level. It hasn't taken out 25,000 in a long time. So it's not like You know, it's not like this level here or this level here, which doesn't really count as much. 25,000 is pretty important because if it closed above 25,000, you're on for 30s, and 30,000 is pretty significant and psychological for the bulls. But here, this is a big sort of Gandalf, you shall not pass candle at the moment being created at the moment. You know, the day is young, the day has just started. But I just found that amazing how it reversed perfectly in time with the market flush at the end. Anyway, that will do. Let's see what happens tomorrow. I think it's just really exciting at the moment. Every day really is exciting, but this is just going from one way to the other, and all the sectors are sort of correlating to each other, pushing and pulling each other. I just find it really exciting, and it provides opportunity. So I hope you had fun. Hope you made money. Hope you positioned yourself for future money. Otherwise, have a good day. I'll make another video tomorrow.